Welcome, ladies and gentlemen, to Commodity TV and the new edition of our online interview series. We want to get an update from Fortuna Mining. Yes, you hear right. That's the new name of the company. Before it was Fortuna Silver Mines. Now it's Fortuna Mining. And we have here Jorge Ganosa, the CEO. Welcome and good day. How are you?
And thanks again for the opportunity to be in the program and speak to your audience.
Yeah, thank you very much. I'm a shareholder of the company. I want to disclose that also upfront because I think it's a really fantastic company with a lot of potential. And honestly, when I go through your second quarter numbers, I think, you did everything right. That looks really fantastic. And maybe you can comment a little bit on that. And especially, I would love to have you to comment on the convertible notes and the change in the debt and what were the benefits of that, please?
Yes, in the quarter, we delivered 116,000 ounces of gold. That's a gold equivalent for the ounces, which is strong production. So we were able to capture, Jochen, the benefit of these rising prices for gold and silver. As a reference, in the second quarter, we sold our average price for the gold we sold, the price we realized was around $2,334, which compares against the $2,087 we realized in the previous quarter, the first quarter of the year. So rising prices and with meaningful production, we're capturing that benefit. So we generated sales of $260 million in the quarter. 81% of that revenue flow came from gold, about 10% from silver, and the balance was our byproducts, lead and zinc out of the Caylloma mine, Peru. All of this generated strong free cash flow for us. We generated $93 million or 30 cents per share of cash flow from operations before working capital adjustments. And if we discount the sustaining capital that we reinvest back in the business, free cash flow from operations was almost $39 million for the quarter. So all in all, strong production underpinning good financial results.
Yeah, absolutely. I see it absolutely the same way. And maybe can you give us an idea on the swap of the debt from the convertible, from the normal debt to the convertible side now? Because I think you paid off a large portion of the old facility, right?
Yes, and that has been a strategic objective of the company that we've been communicating is we believe a mining company needs to be run with a fortress balance sheet. What do I mean by that? A balance sheet that can tolerate the upheavals of our industry, which are many, and have the flexibility and to provide the firepower a company needs to capture high value emerging opportunities as they appear, right? So what we did, we had a convertible, we had a syndicated revolving credit facility with banks. We had about 125 million in the revolver, paying about 8% on that money, right? Through the convertible, we have raised $172 million, payable in 5 years, at an interest rate of 3 3/4, so down from 8% to 3 3/4, and with a conversion price of around $6.30. All of this is US figures, right? I'm talking about US dollars.
Wow.
So all of this while we maintain a net debt to adjusted EBITDA ratio of 0.2 to 1. The liquidity available to the company today, based on the funds raised through the convertible note and the available credit line in the revolver, is about $355 million right now, right? So we have achieved that set objective of putting together a fortress balance sheet, coming out just recently out of a very capital intensive phase with the build of our last mine, Séguéla, which is our flagship asset. So we just finished a capital intensive phase, and we're immediately in a position to say that we have one of the strongest balance sheets in our peer group.
Absolutely. Super. As you said, you spend a lot of money. Is that now more or less over for the next quarters?
We don't have right now in the portfolio a large greenfields project or a new build, although we do have still in 2024 one large sustaining capital project, which is the leach pad expansion at our Lindero mine in Argentina. We can talk about that project. That's a very relevant project in the portfolio today. It sets the mine for the next decade of reserves and mining. But it's money, $42 million that we need to spend this year on that leach pad expansion.
Okay, so that makes absolutely sense. So with Lindero, that means that's why you had those high costs there, I think. But that means from 2025 onwards, those costs would decrease then, right?
To give you a sense, on a go-forward basis, we need to reinvest in the Lindero mine around $20 to $25 million every year, right? Those are capital funds that go into replacement of mining fleet or capitalized stripping and things like that. This year, that budget has ballooned from $25 million to $65 million. Out of the 65, 42 are this leach pad expansion. The leach pad expansion project is planned to be complete by the month of September, October at the latest. Right now, the project is about 64% complete, right?
Okay.
So by September, October, we should be at 100%. And with that, we take out almost $400 out of the mine all-in sustaining cost. Those $42 million weigh about $400 in the mine AISIN. So, when we consolidate all-in sustaining costs from all of our mines to report Fortuna's consolidated AISIN, that one project weighs about $100 in the consolidated AISIN. So we just reported $1,659 AISIN for the company. $100 out of that is this one project that should be concluded this year. So on a going forward basis, we take out that.
Wow, fantastic. So that means for 2025, as I would say, there is a lot of room to bring down again the costs, maybe.
Yes.
Group-wide.
Yes. Looking at it as a group, we are looking at an all-in sustaining cost more in the range of $1,500 consolidated.
Okay, super. So let's come back to the to Seguela, please, because this is the growth and development project. I think everything is now running really smooth, and I think you had also at Kingfisher, is it called, a very good discovery. So how is it going? All together, I would say. And what do we expect, especially by the year end and 2025 for that mine?
Yes, there is nothing that creates value in this business as a meaningful discovery. And we're thrilled because Kingfisher is a meaningful discovery, right? In a mine that is already a flagship asset for the company. Why do I say it's a meaningful discovery? 3 reasons. One, it is a blind discovery. What does that mean? It doesn't have a surface expression. The discovery was made because of systematic work throughout the property, identified in this general area, one single point sample with very low gold content. And our exploration team decided to go back to that one single sample out of a large grid of sampling that had nothing, and put a drill right below the node. And what we have discovered is a deposit hosted in a shear zone or a fault that was not known to us, that strikes for 2 kilometers. By now, we have drilled about 14,000 meters in 113 drill holes. And those 14,000 meters have defined mineralization that is continuous for 2 kilometers at Kingfisher. The boundaries of the mineralization to the north, to the south, and at depth are still not closed off. So it's a blind discovery, and that speaks to the exploration potential that we have in the 35-kilometer strike length within our property, right? Second is meaningful in size, right? And third is an opportunity that we can capture and run through our mill in a relatively short time. Kingfisher is located only 4 kilometers away from our processing plant and our main antenna ore body where we are currently mining. It's only 4 kilometers away.
Super. The grades look also fantastic. I mean, you went up from 1.56 in 2023 now to almost 3.5 grams gold per ton. That's also fantastic. Do you think that is sustainable in the grades? Can you hold that? Because also your recovery is at 94%, which is fantastic. It's at Séguéla.
Yes. In the second quarter, we had to deal and manage an issue which was power shortages in the Côte d'Ivoire national power grid. Two isolated events took out two power producing plants in the country. So we had intermittent power available throughout the second quarter, and that intermittent power, the hours lost throughout the quarter, add up to about 19 days of being down without power. If I aggregate, the hours of lost power throughout the period, that amounts to about 19 days without power. So what did we do to remediate that or mitigate the impact of those 19 days down in the quarter? We have flexibility in our mine plan, so we were able to increase gold grades, Joachim. And also, very important, our mill is running at 40% higher throughput than what we originally designed. The team has done an excellent job capturing all of the opportunities we have in the design of the processing plant, optimizing things, and being able to squeeze 40% more throughput capacity than originally designed. So the combination of higher grades, higher throughput, allowed us to make up for those 19 days without production, right? Because the days we produced, we were running the mill with higher grades and a higher throughput. You should expect in the coming quarters grades at Séguéla to come down more in line with our mine plan, which is close to reserve average, around 2.5 grams, right?
Okay, but will you use then the mill with that 40% more capacity in the future too, or will you go back a little bit?
That's the objective.
Okay.
That's the objective. The objective is we can maintain the grade, but run the mill at a higher throughput, right?
Okay, super. So
that's an opportunity that we're capturing. We have been capturing, and we're capturing now. During the period, we averaged throughput capacity in terms of tons per hour, about 208 tons per hour. That's what we can process. And we had a peak of around 230 tons per hour. So our objective is continue squeezing the lemon there to see if we can stabilize at around 230, even 240.
Okay, super. So there will be like a really balanced and sustainable production there. And I think also with the all-in sustaining costs around the $1,100 level, that is a fantastic contribution to the group, right?
Yeah, this mine produces gold at a cash cost of under $600, 550 cash cost. If we factor in sustaining capital or all-in sustaining cost goes up to $1,000 to $1,100. Remember that the average all-in sustaining cost for the gold mining industry today, according to the World Gold Council, hovers around $1,400, $1,500, right? per ounce.
The last time we spoke about, it was about, yeah, maybe it has to close your mining last year of the reserves, and but then you had a nice discovery, or a nice discovery I cannot say, but a nice drill bit at the Jesse Bean with over 1,000 grams silver per ton. So have you still further explored? Is it going, yeah, as you thought, that you maybe still can enlarge the mine life?
It's, we are well advanced with our work, and as we have been communicating, we have three options for this mine. One is go into a closure plan by the end of the year, trigger a progressive closure and monitoring plan. Second is we decide to place the mine on care and maintenance while we continue doing optimization work and exploration. Bear in mind that we are exhausting reserves by year end, reserves that we estimated almost 6, 8 months ago. But the mine still has resources. We have about 20 to 30 million ounces of silver in resources. So we're still working to see if we can convert those resources to reserves, right? So that and that added to our exploration work at Yesi and other areas. So a lot of that work and those iterations are taking place. For example, we have higher prices for gold and for silver. The Mexican peso, although it was strong in the second quarter, has recently been devaluating, went from 16 pesos to the dollar to 19 pesos to the dollar. That helps us. No, that helps the economics of the mine. So all of those things are being assessed as we optimize the optimization. So it could be that by year end we decide to place the mine rather than on closure, on care and maintenance, while a lot of that work continues.
Okay.
And last, perhaps there is an opportunity to continue doing some mining, while we carry on with this work. It is in the third quarter, where we're transiting now, that we need to make the decision of which of those avenues we'll follow, depending on the outcome of all of the work that we're carrying. But certainly closure is an option. I have to say, though, that a lot of the bank analysts and investment analysts that cover Fortuna already discount San Jose with zero value. If you look at the net asset value assessment of the company done by the different banks and analysts, either we're receiving zero value or very minimum value for the San Jose mine today.
So what would you need to convert those resources into reserves, or could you say, hey, you know what? Now we know those resources are so well understood that we still can produce.
Yes, it's an economic exercise. No,
Exactly.
So to mobilize or migrate resources to reserves, you need to prove the economic viability of those resources, not the geological certainty. The geological certainty is there.
Yeah.
But we need to see the cost, and the investments required to access that ore, the cost required to extract it, process it, and sell it. So, those resources in November, we could not convert them economically into reserves. So it's not about geologic certainty. It's about economics. But again, at a higher price, with a currency that's devaluated compared to what we use.
Okay.
And for example, downsizing of certain activities in the mine, or doing it at a different rate, or things like that, perhaps help us make those ounces economic. But we still have ounces in the mine. It's not that what we are depleting is the reserves, not the resources.
Yeah, exactly. Yeah, that's why I have hope that it goes on. That's
We
great.
all do.
Yeah, absolutely. So let's come to the future of the company, as I call it, Diamba Sud. So how is it going there?
We've been drilling nonstop since November, and that the program has come to a halt due to the rainy season in July. No, so what we're doing right now is something that's very important, and perhaps your audience that's interested in our business of of mining. This is key, no? This is a new property for us, a new geology. So we want to produce a resource estimation by year end, but that resource estimation is just a geostatistical exercise.
Mhm.
And that geostatistical exercise needs to be supported by a robust geologic understanding of mineralization controls, a sound geologic model. So, with all the information we've been generating since November, plus all the information that Chester, the previous owners of the project, had generated, we're combining all of this and making sure with our geologists, our managers, and our consultants that we have a very robust, sound understanding of the controls on mineralization. Once we have that, then we can move to the next step, which is our resource estimate, supported by the geology. So we have been generating a lot of information, generating a lot of data. This is a new deposit for us. For making sure we have the understanding so we can support a good, reliable resource.
Absolutely. When do you think the resource estimate might
Year
come?
end.
Yeah,
Year end.
okay. That's fast. So the next 5 months is.
Yes, yes.
So you want to make us a
Year end.
nice Christmas present.
For all.
Fall.
And what follows, because that resource S will inform or feed a preliminary economic assessment that we plan to publish in the first quarter of the year, 2025.
Okay.
Right?
Super.
So resource estimation, preliminary economic assessment. That's the sequence. The project still has risk from the perspective of, I want to see this project with certain size and economics. You know, we're doing the work, we're liking the results we're seeing coming. Now we need to put that in a study and see the robust economics that we need to make a construction decision, right?
Yeah.
So there is still some geologic and project risk assigned to this. We're all confident and excited based on all the work that's been done and the results that have been coming. And now we need to package it and put forward something that makes sense. Right?
Okay, super. Absolutely. That sounds like a real strategic plan to me. I like that. Perfect. So, final question. What will you do then with all the excess money? First of all, you are saving $6 million on the interest side. That was my rough calculation. That's the first thing. And the second thing is with those higher gold and silver prices, and you are a real cash and cash flow machine, of course, I would call it. Could you imagine to buy something in addition, or would you say, no, we like to more grow organically?
We have a lot of organic growth potential in the company, and we
Absolutely.
just talked about two very clear ones. It's Kingfisher discovery. So the question, the following, you see, Kingfisher, I told you we'll have a resource estimation by year end. Once we have that resource estimation, your next question is going to be,
How do you finance that?
does this support a bigger mine
Yeah.
now? Or it's just ounces that will go to the tail end of reserves 10 years? That's a question we need to answer.
Yeah.
And that's, if it supports a bigger mine, which is what, we would prefer, that means capital deployment.
Absolutely.
We need to expand the mill.
Yeah.
Diamba Sud, by year end, we'll have a project where we'll have to start making decisions based on the information we receive from the studies, right? So that's another opportunity. We have drill rigs turning Peru, in Mexico, at two properties, Diamba Sud and Seguela. Yaramoko, we continue having success in Yaramoko, expanding the life of mine. We sometimes don't talk enough about Yaramoko in Burkina Faso, but when we acquired Roxgold in 2021, Yaramoko was set for closure in 2023. It was set to exhaust reserves by 2023. We did not close the mine in 2023. We had an exceptional 2023 in terms of production. 2024 is looking exceptional as well. 2025 is looking very strong, no, in our studies and our work. and the mine is going into 2026 now.
Mm-hmm.
So all of that based on exploration success.
Yeah,
Right. We're
absolutely.
exploring also in northern Cote d'Ivoire a very exciting early stage project
Mm-hmm.
called Tongon North.
Mm-hmm.
I don't talk. We don't talk much about those
Mm-hmm.
projects because they are early stage. So
Mm-hmm.
I can be very excited about them, but I will. I rather be more upfront and on what they are once we do our work, and I can show something
Mm-hmm.
tangible like a drill hole. You know, a discovery made. No,
Mm-hmm.
these are discovery opportunities.
Yeah. Well,
So, but we are active with two of those in Mexico, one in Cote d'Ivoire, or programs at the mine. So, very active on that front for organic growth. And for M&A, we're not M&A junkies. No,
mm-hmm.
we have acquired,
Yeah.
and built 5 mines uh, in 20 years. So we're no junkie for deals, but we're not shy when we see something we like. And what we have done with the convertible note is provide the company the flexibility and strength to pursue something and give ourselves the best chance for success if there is something that where we identify deep value for our shareholder.
Mm-hmm. Yeah,
Right?
that's the most important thing. Absolutely. Yeah, and as I see it, you are collecting first of all the money, but you are wisely investing into the future of the company, right?
In this mining, I think of it as cycling sometimes. You cannot stop moving the pedals.
Mm-hmm.
That is exploration in the
Mm-hmm.
business. So this year we have our largest exploration capital budget in history. We're
Mm-hmm.
investing about $45 million in exploration in 2020. That's our largest budget in history.
Wow.
No, that's the best return we can provide to shareholders is through meaningful discoveries like the one we just had in Kingfisher,
Mm-hmm.
or advancing successfully Diamba Sud in Senegal. Right?
Exactly. As your next mile, maybe 2027, 2028.
I mean, there are still again stage gates we have to
Mm-hmm.
cross,
Yeah.
and but if everything goes accordingly, that's a project that could potentially be a mine or close to being a mine in 2026.
Okay, super. Yeah, my last question. What do you think of the silver price today on the silver market? We heard some interesting stories that Chinese solar panel producers are already buying in South America directly silver from the gate and stuff like this. So what do you think? What is still holding back the silver price?
I tend to have a different view with respect to silver and gold as well than some of my peers, CEOs, and market people who comment prices on publicly. Is that Joachim? I don't think any of that is relevant.
Mm-hmm.
I think what is relevant is when silver is seen again, by the wider market as a financial tool, and because it's like the ocean sweeping in. When financial demand comes in, is when things start happening, right? In the meantime, yes, we have more appetite on for photovoltaic or whatever use, but in reality, what moves the needle here is financial demand. And until that financial demand comes back again, it's like a tide.
Mm-hmm.
When the tide comes in, it sweeps everything.
Mm-hmm.
It's like a tsunami, sweeps everything. And that tsunami
Yeah.
is the financial demand. Everything that happens in the meantime with that is not, I don't believe, moves the needle in any material significant way. Yes, silver does some physical uses, but and the market can be tight and whatnot. But until we see that financial demand well established again, like we've seen in other cycles, like we have seen in other cycles. In 2010, 11, 9, 2009, no? We saw strong appetite for silver as a financial tool. And, you know, we are seeing signs that for gold and silver, the day is coming, and the day is coming, and the day is coming, no? And we sold gold in the second quarter. I think I told you already, at around $2,337. That was the average price of our
Fantastic.
sales. In the previous quarter, it was $2,087. In the last quarter of last year, no, it was $1,990. No, so progressively every quarter we're selling gold and silver at a higher price.
Yeah, and that's a good thing
That's
to do
telling you
so.
something.
Exactly. Yeah.
That's
Yeah.
and that's telling you something. There, we know that Eastern or central banks outside of the Western world will be aggressive buyers on the gold market. And we know that there is appetite for coins and physical from the retail sector. But once the large institutions start believing again that they need to hold some gold in the portfolios in a meaningful way, things change. As I always say, in 2011, I could have endless days of meetings with mainstream money managers, large financial institutions, who had a keen interest on gold, silver, and mining companies in the precious metal space. That is not back yet. We still see the appetite coming from the specialists, largely.
Yeah, that's right. Yeah, the let's call it mainstream, if you want to call it like that, is not really in. And as you said, also the generalists are not in. And I see that also, absolutely. Yeah, and when this restarts, really, I mean, with gold, there's something with the national banks. That's one thing which pushed us further. But with silver, it's exactly that point when we need, yeah, to get the tide running.
If you see the tide, I'm people believe that because I mine gold and silver, I have a crystal ball sometimes, and I am just a miner. There are a lot of many people far more studious on gold and silver than I am. But I do know that there is a moment in time when that financial the demand of the metals, or the financial appetite from the generalist comes, and then it's a tide, as we will use. It's just a force. There's just so much money out there that comes seeking the comfort and protection of the precious metals in the portfolio.
Absolutely.
And that's just a very powerful force.
Yeah, and I mean, it's only like a 30 to $35 billion market every year, right?
Yes, no, it's
not that large.
Compared to what's out there, it's small.
Exactly. Super. So let's wait also for the tide. But in the meantime, I know you guys are doing a great job. So thank you very much for that. Thanks for your time and the update. And I would say just keep it going and do the exploration, do the organic growth. That's exactly what helps a lot. And I'm pretty sure we will see then also much higher stock prices. Jorge, thank you very much.
Okay.
Thank you. All the best. Yeah, ladies and gentlemen, that was Jorge Ganosa, the CEO of Fortuna Mining, and you heard it. Everything is in good shape. Well, on the one hand, gold and silver prices are rising, but on the other hand, the company is really delivering a fantastic production in gold and in silver, of course, and also a beautiful margin. Please don't forget that this company makes really money. They have a cash flow, they have a free cash flow. They have changed the debt structure, which saves them also in addition a good $6 million a year. And they have enough firepower to really feed their organic growth. And I think with Diamba Sud, this will be hopefully the next big mine here for the company. And stay tuned. Make sure you own some Fortuna Mining. I do, definitely, because I think it is a great company. We have our next price target is approximately 9 to 9.5 Canadian dollars. And we are pretty sure we will see that in 2025, the latest. So thanks for watching us. And for today, bye-bye from Austria.